All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Thursday, everybody. I hope you had a good holiday yesterday. Markets are back open this morning on June 20th, 2024. And our top story this morning, it's a bank again. This time across the pond in Japan. Norinchukin is having big problems. And guys, I don't want to be too fuddy here right now. No bank has failed. I think it's a little early to say bank crisis, although this does very closely resemble a March 8th, March 9th kind of scenario back in 2023 in the US. Now what happened on late Tuesday? We had an announcement from Norinchukin that they are going to be selling $63 billion worth of sovereign bonds from the U.S. and Europe. They didn't say how much. I'm guessing most of that's going to be U.S. treasuries, but there's also some European ones mixed in there. So Norinchukin Bank made a big bet on lower interest rates. They piled into U.S. treasuries, just like Silicon Valley Bank did. And of course, interest rates stayed higher for longer. Those rate cuts have not come down. Well, now Norinchukin is being forced to sell those treasuries at a very big loss. They're expecting a loss of $9.5 billion on the sale of $63 billion in bonds. Now, that estimate of $9.5 billion was only about $3 billion just 1 month ago. Just a month ago, they said they had about a $3 billion pile. It was actually, they said 500 billion yen pile of unrealized losses on these bonds. Now they're actually being forced to sell them because of this big negative carry. Put a pin in that. We'll be back to that one. And then all of a sudden, magic, the losses triple when they go to sell. So what happened in a month that these losses have tripled? Interest rates have actually fallen in the last month. Those bonds should be worth more than they were a month ago. It's almost like the bankers weren't being entirely forthcoming with just how big that pile of unrealized losses is. Interesting. Of course, you can cue the immediate reflexive calls among bank regulators. And don't worry, everything's fine. No systemic risk, strong and resilient. We're all fine here. We're all fine here. How are you? Not so encouraging to see that data. Now, let's talk a little bit about Norinchukin. It's a $600 billion bank. It's the fifth largest bank in Japan. Now, let's just put that in context. Silicon Valley Bank was about a $200 billion bank, and they announced a little bit more than $2 billion worth of losses in a treasury sale in order to meet some of the deposit flight that they were having in early March of 2023. And that $2 billion loss on the sale of treasuries was enough to trigger a panic among its depositors that they started pulling their money out. And of course, the bank started to fail. Now, there were some unique things with Silicon Valley Bank, a lot of startup capital involved there. So there's a lot of cash burn going on with those companies. Plus, the unusually high concentration of unrealized deposits played a huge role in the collapse of Silicon Valley Bank. I don't think we have that over at Norinchukin. Norinchukin is a bank that's predominantly farm collectives and fishing collectives. It's not really a big tech kind of bank. It's more of a lower income kind of bank, but it has a huge customer base. But let's talk about this in perspective. The losses Norinchukin is talking about eating are about 4 times the size of the losses Silicon Valley Bank took. And well, Norinchukin is about 4 times the size of Silicon Valley Bank, or actually about 3 times the size. So relatively speaking, this is actually a bigger pile of losses at Norinchukin than initially caused the panic over at Silicon Valley Bank. So they've got a bigger problem than SVB had. Now, I want to temper that because the events at Silicon Valley Bank, that loss on the bonds triggered a panic among depositors, and it was that run on the bank that ultimately failed them. It was the loss on the bond sale that triggered the panic. So it wasn't necessarily the bond losses that failed the bank. It was the panic that did. We don't have a panic at Norinchukin yet, with an asterisk. We just have a bigger loss over at Norinchukin than Silicon Valley Bank had. So now the problem with Norinchukin Bank is CLOs. That's another big problem. Norinchukin is one of the biggest holders of U.S. CLOs, or collateralized loan obligations. Now, they're basically bonds made up of corporate debt. There's a lot of commercial real estate hiding in CLOs. There's a lot of business loans to zombie companies hiding in CLOs. And from 2018 through 2022, Norinchukin was the biggest buyer of U.S. CLOs in the world by a huge margin. They got the nickname the CLO whale because of that. Now, what we're talking about right now is just unrealized losses from U.S. Treasuries. But Norinchukin is the biggest holder of U.S. CLOs as well. And while they stopped buying those in 2022 when interest rates were a lot lower, they obviously have a huge pile of unrealized losses in their CLO loan book as well. But we're not even talking about that. They're actually talking about buying more CLOs now, rolling the proceeds from those bond sales into even more of that garbage debt. So, they lost a bunch of money on U.S. Treasuries, and they're saying we're going to buy commercial real estate debt and we're going to buy zombie company debt. And I guess just hope for the best. Not a very risk-averse behavior from the fifth largest bank in Japan here. So we'll see what goes on with that bank. Again, it's not a crisis yet, but we're getting there. And a sale of $63 billion worth of U.S. and European bonds, that's going to put downward pressure on bond prices, upward pressure on bond interest rates. And, well, you got Janet Yellen here in the States who's trying to do this Treasury buyback to try to suppress interest rates on the long end of the yield curve. If Japanese banks start dumping their U.S. Treasuries, bringing that money home, that's going to be big problems for Aunt Janet over at the Treasury. By the way, shout out to Michael Gayet over at the Lead Lag Report. He's been talking about this. This could be the early innings of the unwind of the yen carry trade, something he's been talking about for years. This might be the first instance of that. Again, it's not a trend yet. It's not a systemic risk yet, but this is a big deal. It's a big problem at a very big bank that will have international repercussions. Also going on this morning, we've got the New York Rent Control Board finally came out with their decision on raising rents on rent-controlled buildings, multifamily buildings in New York City. And the final decision was a 2.75% approval for rent increases in New York City. The rent is going to be going up 2.75%. Now, that's important, guys. Number one, poor people already can't afford the rent in New York. So there's a very emotional aspect of this story. Obviously, nobody likes to see rent going up for poor people. And there was plenty of protests and plenty of angry behavior at this meeting where this happened. But let's remember NYCB, New York Community Bank. Let's remember Signature Bank. Remember, multifamily housing, in particular, rent-controlled multifamily housing, played a huge role in the demise of those banks. Signature was more driven by the collapse of crypto and the loss of their Signet, also unrealized losses on U.S. Treasuries, but multifamily played a big role. And the FDIC still owns most of that multifamily debt from Signature Bank. They found a nonprofit collective that was going to buy like 5% of it. But for the most part, all those rent-controlled buildings are still sitting on the books at the FDIC. Well, New York Community Bank was almost failed by insolvent multifamily apartment buildings with rent-controlled apartments in them. And the New York Rent Control Board just said, you guys are only allowed to raise your rent 2.75%. Now, if these landlords are already insolvent and a lot of them are already walking away from their loans, a measly 2.75% rent increase that doesn't even keep pace with the current rate of inflation, let alone catching up from all the losses of prior years, this means more of those landlords are probably going to walk away from their loans. So as much as it sucks to see rent going up for poor people, let's also keep in mind that those landlords are providing a service and they're losing money on it, which means those landlords are going to go out of business. Well, what's going to happen to those buildings? Repairs aren't going to get made. Loans are going to go bad on them. They're going to change to new owners. This could rekindle that crisis at New York Community Bank. So that is going on in commercial real estate this morning. What else? We got Dell and Supermicro are making a big AI factory for Elon Musk. That's just stupid AI talk for they're building a data center and, well, their stocks are going up. Forget bank crises. Forget everything else going on in the economy. Somebody said AI number go up. So Dell and Supermicro Computer, their stocks are up big this morning. Also, Accenture was out with their earnings report. It was a terrible earnings report. They missed on the top and bottoms line, and they lowered their guidance, and they lowered their EPS estimates for the full year. But the stock is up almost 9% this morning. Why? Because somebody said a thing about AI. This is the dumbest, most obscenely overpriced market I've ever seen. Oh, NVIDIA, the biggest company in the world now. Congratulations, guys. Keep blowing that bubble. Keep blowing the second you stop. look out below. And last but not least, we got some labor data this morning that was pretty interesting. It wasn't terrible data, but it sure wasn't good. Initial and continuing jobless claims not looking so good this morning. We got a lot to talk about this morning. Why don't we shrink my big million of a head and get into these numbers? Guys, don't forget that like button for the algo. It really helps me out. And if you're new here, hit that subscribe button and come back. We do this every morning when the markets are open, that is. And the S&P 500 is currently up 12 points or 0.22%. You can see we're up a lot more a few hours ago, but we're starting to grind a little bit lower here, but still in positive territory for the S&P. The Dow, meanwhile, is in negative territory, down 37 points or 0.09% ahead of the opening bell. And the NASDAQ is leading the way higher, up 64 points or about a third of 1%, but much like the S&P, giving back some of those earlier gains here. Meanwhile, though, we got the dollar is up 25 basis points or a quarter of 1%, possibly related to that trouble at the Japanese bank this morning that we have a stronger dollar here. We'll keep an eye on that one. And then looking over at bonds, hey, check out the 10-year Treasury, up 12 basis points this morning, almost 3% higher on the 10-year Treasury, yielding 4.273. This is pretty interesting, guys. We got stocks are up mostly. We've got a stronger dollar, and we've got higher interest rates. And we're going to see in commodities, too. We've got gold and silver higher this morning. Something's not quite right in the market this morning. The 30-year Treasury is at 4.412. That's up almost 6 points. Again, the 10 years up 12 basis points. The 2 is at 4.737. That's up 3 points and change. And the 1 month is still falling, 5.304. We've watched the 1 month fall down about 8 basis points in just the last week or so. Keep your eye on that one. The market is starting to expect that first rate cut pretty soon, and they're starting to price it in here. So big move in the T-bills, but it's that move in the 10-year this morning that really caught my attention. We shouldn't see stocks in the black with a 12 basis point increase in bond yields. Keep an eye on that one. And also, metals are looking pretty good this morning. Check out the price of gold is up about $10 here, or 0.4% higher. Spot gold is at $2,338 an ounce. And spot silver also looking pretty good, back above $30 at $30.11. That's up 38 cents this morning, or 1.3%. It was up a lot more than that earlier. We're also starting to see those prices surge overseas again. Check out this one from Bai Xiaojun on X this morning. The spot price on the Shanghai Gold Exchange for silver, $34.24. So we're back to $4 of arbitrage between the U.S. and China. Again, that's going to put some upward pressure on silver prices this morning. And look at this chart of silver, looking pretty good here. It was looking a little bit better earlier today. We were watching that 50-day moving average for a couple of days here. You can see we found nice support there. We caught a little bit of a bounce, and now we're heading higher here. So the technicals are looking really good for silver. The big wick on top of that green candle is a little worrying this morning. We're seeing the price come back down from the highs just a few minutes ago here. But that big arbitrage opportunity in China is very encouraging. So silver's looking good here. Congratulations to the stackers this morning. The price of Bitcoin, meanwhile, doing the opposite when it comes to that 50-day moving average. Bitcoin is up 800 this morning, but at $65,739 as priced on Coinbase. But Bitcoin was also flirting with its 50-day moving average for a couple of days. We broke below that one a few days ago. And then if you zoom in here, you can see this morning we came up and we just barely kissed that 50-day moving average. And now we're heading lower again. So Bitcoin technically not looking so good here. But there's some good news for Bitcoin. Check out MicroStrategy. They have completed their $800 million convertible senior note offering. So MicroStrategy is borrowing money, and they're going to buy Bitcoin with it. This is what Michael Saylor does. It's a little bit of an infinite money glitch going on over in the Bitcoin market, but of that $800 million, he's going to use about $786 million of it to buy more Bitcoin. And, of course, that debt will be convertible to shares in MicroStrategy stock. So that's a little bit of pent-up demand for Bitcoin that may be enough to put us back above that 50-day moving average. All right, let's talk a little bit about this one here. This is Norinchukin, again, having big problems. Japan's century-old bank sends a warning to the world on higher for longer rates. The Japan bank seeks to unload $63 billion in bonds to stem losses, and the firm mulls a shift to CLOs and other assets after expected losses. Watch out for those CLOs, man. For years, it was best known as Japan's CLO whale. a $357 billion investing giant with seemingly insatiable appetite for yield in an era of rock-bottom interest rates. Now, Norinchukin Bank has become one of the biggest casualties of an entirely different financial world where higher for longer borrowing costs are exacting a painful toll on the market's weakest hands. The agricultural bank surprised the markets this week by saying it would sell $63 billion of low-yielding U.S. and European government bonds that had become unprofitable to hold after the firm's shorter-term funding cost jumps. The unlisted firm warned that losses this fiscal year may swell to 1.5 trillion yen, or $9.5 billion, triple an estimate made less than a month ago. So Norinchukin Bank here, they've got a big, they're calling it a negative carry. Remember, guys, we got an inverted yield curve, right? So the longer term interest rates are a lot lower than the shorter term interest rates. Well, banks borrow short term and lend long term, which means these banks are losing money paying those higher short term rates, lending at those longer term rates. So this Japanese bank, Norinchukin, they've got a massive negative carry. It's costing them money to maintain these positions day in and day out. And so they're throwing in the towel. They're saying, we're sick of waiting for the Fed to cut. We're dumping these treasuries. It's going to put upward pressure on U.S. Treasury bonds. Perhaps that's playing a role with what's going on in the 10-year this morning, or maybe we got some bond traders are trying to front run that sale from Norinchukin. While Norinchukin and the Japanese government have expressed confidence in the bank's ability to weather the losses, the episode is a reminder of the danger still lurking in the financial system 15 months after the collapse of SVB Financial Group's Silicon Valley Bank. Signals from the Federal Reserve and other central banks that they are in no rush to cut rates have caught out many investors betting on more aggressive moves. That's creating a tricky landscape for institutions like Norinchukin, who piled into U.S. and European sovereign bonds on the expectation that falling rates would spark a debt rally after 2 years of declines. Guys, it's also worth pointing out that just a few weeks ago, I guess it was a few months ago now, at the end of December, Norinchukin's bank, their New York branch, was added to the list of banks that can access the Fed's repo facility, their standing repo. So very quietly at the end of last year, the Federal Reserve made it so the New York branch of this Japanese bank could borrow emergency liquidity from the Federal Reserve. It's possible we could end up in a scenario here. If this situation gets much worse, we could end up in a scenario where the Federal Reserve, through backdoor channels, is propping up not just our banking system, but Japanese banks as well. Keep an eye on what's going on at Norinchukin, guys. And again, those CLOs, all these big losses, this $9.5 billion of losses on U.S. Treasuries says nothing about how many losses might be lurking on their balance sheet from their CLO investments. These guys were, I think it was something like $40 to $46 billion worth of CLOs this bank owns. And they stopped buying them in 2022 when interest rates were a lot lower. Those rates have risen, which means those CLOs are worth a lot less than they paid for them. But we're not even talking about commercial real estate here. We're talking about just losses on U.S. Treasuries. They haven't even begun to eat the losses from that commercial real estate debt. And well, let's talk about that, because this one in the Real Deal this morning, Rent Board approves a 2.75% hike as landlords and tenants take aim at a broken process. Owner members claim inappropriate political pressure and votes based on fear. After landlord members voiced concerns for their safety at the Rent Guidelines Board final vote, tenant advocates and electeds rallied outside the meeting at Manhattan's Hunter College, temporarily blocking the building entrance and driving the New York City Police Department to make arrests. So there was like threats of violence at this meeting, apparently. The landlords that were there asking for a bigger rent increase so they could stay solvent said they feared for their safety. They couldn't get out of the building, which, by the way, isn't that like kidnapping when you unlawfully detain someone in a building and you don't let them leave? Isn't that against a law? There's got to be a law against that, right? Well, the cops showed up and started arresting protesters here. In the end, the tenant showing amounted to bluster. Both tenant and owner members ahead of the vote acknowledged that no amount of protest or landlord testimony could sway the RGB. It had already made up its minds. RGB, that is the Rent Guidelines Board. The board approved Chair Nestor Davidson's proposal for a 2.75. Let me restart that sentence. The board approved Chair Nestor Davidson's proposal for a 2.75% rent hike on 1-year rent stabilized leases and a 5.25% increase on 2-year leases. The motion passed by a 5-4 vote. The Rent Guidelines Board also froze rents on stabilized hotels. So that 2.75% rent increase, the tenants don't like it, but guess what, guys? That's not going to be enough to save your landlord who is already losing money because he's got to refinance his debt. 2.75% is not going to be enough to save the balance sheets of these landlords that are just hopelessly underwater. Now, there's some lines down here that were pretty interesting. The frustrations aired by both sides speak to a process that pits owners' needs against those of tenants, a recipe ensuring no one goes home happy. The problem is it's a binary choice, said Jay Martin, who runs the Landlord Group's Community Housing Improvement Program. That choice is going to make people homeless or make these buildings insolvent, he added. Now, guys, I would add that if those buildings go insolvent, some of those people might end up homeless anyway. Certainly, their stuff's not going to get fixed when things break. Landlords who don't have any money don't make repairs to buildings. So the conditions in some of these dilapidated buildings are just going to keep getting worse and worse, especially now that the landlords are not able to make renovations. A 2.75% rent increase is not going to be enough for a landlord to overhaul an apartment and make it livable again. So unfortunately, things are going to get worse for the landlords and for the tenants here. There's not really an easy way out other than stop rescuing the stupid banks and stop pumping liquidity into bond markets in order to prop up the asset values here. If you let those asset values fall, then maybe those rents will come down a little bit. But no, we're not talking about doing that. And, well, we even got this one this morning from Carl Quintanilla. He's retweeting this one from Mike Zaccardi. They're saying, hey, check out the regional bank ETF and commercial real estate. And they're saying commercial real estate prices have begun to rebound, which is particularly good news for regional banks. We got another guy calling a bottom in commercial real estate here. Unfortunately, though, flag on the play. They got personal foul, chart crime, offense, 15-yard penalty, repeat first down. That's right, folks. This is another major chart crime from the eternal optimists in the financial press. Thank you, official. Thank you for the flag on the play. Good call, ref. Good call. CRE prices have begun to rebound, they're saying here. But look at the chart, guys. Anybody notice the y-axis on this chart? Well, first of all, yeah, look, the chart is going up. Oh, the lines are going up. That must mean the bottom is in for commercial real estate, right? No. Look at the y-axis on this chart. This is showing year-over-year change in price. And this horizontal line here, that is 0%. So below this line means a negative year-over-year change in price. And you guys might notice that 4 out of the 5 categories are still in negative territory, as in the prices for apartments, for retail, for office, and for the national average are all still falling. And office is still falling at a rate of like 17, 18% year over year. Only industrial real estate is positive year over year, and that's being driven by AI mania and this ridiculous build out of data centers, and also partially being driven by government subsidies of things like the CHIPS Act and EV factories that nobody wants the vehicles that are coming out of them. But this is not showing commercial real estate prices rebounding. All right. When prices are falling, but falling slower, that's not a rebound. That's just a slower collapse. And these eternal optimists in the market, they're just every day there's another person trying to declare a bottom in commercial real estate. Well, that's not what this chart is saying. This chart is saying commercial real estate is still falling. Office is still falling high double-digit percentages year over year. And industrial, which is the benefit of government debt spending and an AI bubble, is the only thing that's actually seeing prices increase. You probably got warehousing is playing a role too, the shift to online shopping. But almost every category is still negative year over year. No bottom in commercial real estate. Sorry, guys. I award you no points. Everybody is dumber having read that tweet. Also going on this morning, let's talk a little bit about the ridiculousness of the AI bubble. NVIDIA, now the biggest company in the world. Congratulations to the NVIDIAs. Everybody's acknowledging it's a bubble now, by the way, unless you're just an imbecile. You're pretending it's not a bubble. But basically, everybody is acknowledging it's a bubble, and yet people are still piling into the stock, which means everybody is thinking the same thing. They're thinking, yeah, it's a bubble, and eventually it's going to crash, but I'll just sell once the selling starts. I'm going to keep riding it. Well, when you have an entire market of people who are acknowledging that something is overvalued and they all plan on selling at the same time, well, let's just say that doesn't usually end very well for those people. But hey, in the meantime, congratulations on your gains. It's the biggest company in the world and it's getting bigger. Now, check out this one. Accenture earnings miss estimates. Why the stock is rising. Accenture stock was climbing on Thursday after the management, consulting, and tech company's third quarter earnings revealed strong demand for its artificial intelligence offerings. Oh, somebody said AI. Accenture reported the fiscal third quarter new bookings of $21.1 billion, an increase of 22% from the prior year. Generative AI new bookings were more than $900 million in the quarter. Oh my God, the AI is so amazing. We also achieved two significant milestones this quarter with $2 billion in generative AI sales year to date and $500 million in revenue year to date, which demonstrates our early lead in this critical technology, CEO Julie Sweet said in the news release. Wow, that's 3 paragraphs of fluff and pointless statements about AI. Now let's find out if the company actually makes any money, shall we? Accenture reported third quarter adjusted earnings of $3.13 a share on revenue of $16.47 billion. Analysts surveyed by FactSet were expecting $3.16 a share on revenue of $16.56 billion. Wait, what? So after 3 paragraphs of puff pieces on AI and oh my God, our AI numbers, you missed on earnings and you missed on revenue? You missed on the top and the bottom line? The company also lowered its earning estimates for the fiscal year. Accenture now said it expects 2024 adjusted earnings of $11.85 to $12 a share. That's compared to previous estimates of $11.97 to $12.20 a share. Wait, they lowered their guidance too? The new estimates are lower than analysts' expectations for $12.12 a share. And they now say they expect their fiscal 2024 revenue growth between 1.5% to 2.5%. That's not even the rate of inflation, compared with previous estimates of 1% to 3%. Guys, this was a terrible earnings report. They missed on the top line. They missed on earnings per share. They missed on revenue. They lowered their guidance. They lowered their growth estimates. But you know what? They said a bunch of stuff about AI, and look at that stock rocket, up 9.75% this morning. Guys, look at Accenture year to date. Well, okay, year to date, this one isn't looking so good. At least that is reasonable. But a 10% bump on an earnings miss and a guide lower, well, they said a thing about AI. And so there you go. This market is drunk. This is drunk on AI. They drank too much of this AI Kool-Aid. And it doesn't even matter if they make money. Just say it enough times. That's still working. And you got this one this morning. Dell and Supermicro shares jump on reports of an AI factory for Elon Musk's XAI. Guys, I'm not going to read much into this article because there isn't much to read. An AI factory, they're building a data center. All right, XAI, Elon's company, which is made up of engineers that Elon took from his other companies, Tesla and Twitter, they're building a data center, and Dell and Supermicro are supplying the equipment for it. There's no numbers. We don't know how many GPUs, how many server racks are going into it. We don't know how much money it's going to make. All we know is that Dell and Supermicro are involved, and, well, Supermicro stock is up almost 4.5% on that news, and Dell stock is up 5% on that news. No numbers, no details. Somebody said a thing about AI, number go up. Gotta love it. Also going on this morning, we got some interest rate news from European central banks. First of all, the Bank of England left rates unchanged, but they made some comments that suggested August may see a rate cut. The Bank of England revived speculations about an imminent cut in interest rates, hinting that more of its officials may be close to backing a pivot away from the highest borrowing costs in 16 years. Investors priced in more than a 50% chance of a move in August, the first time in more than a month they've been so certain. The UK central bank left the key rates on hold at 5.25% on Thursday, but said the decision not to ease was finally balanced for some of the 9 members on the Monetary Policy Committee. Governor Andrew Bailey said it was good news that inflation fell back to its 2% target for the first time in almost 3 years, but that officials wanted to be sure that pressure on prices is subdued before acting. So we got no change from the Bank of England, but they're more likely to cut in August. Meanwhile, we got the Swiss National Bank. They cut their interest rates again. Their overnight rate is down to just 1.25% at the Swiss National Bank. So we got some relatively dovish moves from central banks in Europe today that could be contributing to the stronger dollar this morning and to the higher interest rates we saw in the 10-year this morning. Also, that Japanese bank turmoil is probably contributing to that as well. And lastly, initial jobless claims in the United States eased by 5,000 to 238,000 on the second week of June. That's above market expectations for 235,000. So we got a slight decline here in initial jobless claims here in the U.S., down 5,000, although they were expected to drop more. But you'll notice this trend in initial jobless claims. Clearly, it bottomed out in December, and it's been rising ever since the start of this year. We're down off the highs from last week, but still trending up. That's initial jobless claims. Now take a look at continuing jobless claims. That increased to 1.828 million for the week ending June 8th. That's up from 1.813 million in the previous week. So continuing jobless claims, the same thing. The chart bottomed out, and now it's starting to rise. Those are rising at a much faster level despite lower initial claims. Continuing claims made a big jump. That's the second big jump in a row. And we're back to the highs we last saw in January. So it's getting harder to find a job if you lose your job. Although the job loss numbers still not that staggering. Unemployment, still it's hovering around 4%. We've done no shortage of commentary in this channel about how the jobs market is just not nearly as strong as they suggest it is in the press. And I think we're going to see more data to that effect in the coming months. And I just want to say thank you very much to Viv B. Thank you so much for the super chat, Viv. She says, nightmare fuel. Michigan University experiments using stem cells from embryos as batteries to fuel AI power demands. What? Last 100 days, then change out to new stem cells. Video on YouTube at the Blaze. Oh my God, I hope this is fiction. That's the Matrix, right? I mean, it's pretty much the Matrix. Not quite the Matrix. We're only using the stem cells. We're not actually growing babies in farms and sticking wires in the backs of their heads yet. Guys, I just want to add, like, dystopian futuristic science fiction is not supposed to be an instruction manual for Silicon Valley. I just want to throw that out there. I'm not familiar with that story, Viv, but JFC. Oh my God. Who? I don't want to read that story. I don't even want to think of it. Stem cells from embryos as batteries. Oh, my God, these Malthusian cultists that are creating artificial intelligence. What will they come up with next? Thank you, Viv B. I think. Thank you for supporting the channel and for further destroying my faith in humanity this morning. I appreciate that very much. And thank you to Uncle Fedster, who says a little shy on the super chats to say, hopefully this will help. Thank you very much, Uncle Fedster. I appreciate the super chat and the support of the channel. Don't worry about the shyness, guys. We're just coming off a holiday. Thank you, everybody, for having your coffee with the Melonheads this morning. Thanks again, Uncle Fedster, for supporting the channel. And thank you to all my magnanimous Melonheads on Patreon and YouTube for supporting the channel. I appreciate that very much, guys. And hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.